Tuesday, September 9th, market analysis. Stan Ehrlich, 1:46 California time. We had another modest, relatively small, not very volatile up day, creeping up to another potential historical new high for some of the indexes. And I should say, I start out with the indexes. I go to futures, and I usually have some other commentary and stocks, a few stocks. So I want to, again, reiterate that the October lows are highly likely to occur. Approximately 90% of the number of years since 1993, when the SPY started to trade, we have had some significant buying opportunities in October. And very often, it has been September that has been the down month into October for a buying opportunity. Now, I'm starting to see a lot of other market wizards, so to speak, and no offense on Jack Schwagert's books. And I know a couple of the traders that are in some of the books. One of my favorites is Linda Bradford Rashke. We went shopping together in Singapore. So anyway, I think we're still going to have that low in October to buy. So I'm looking very closely for signs that the market is starting to drop off, and I would expect for a few weeks into October. We're not there yet. We're right up against historical highs. We're not overbought, although close, I think, in the Russell. And no bearish engulfings, no sell signals. Today, we have a relatively firm, slightly higher close. And that's what we've got for the E-mini. That's all I can say. We're up against a resistance line, and we have been really ever since August 13th for a month almost. Right up against a slightly upward slanted bull trend line, but when you're trading below an upward slanting line, we call it a bullish resistance line because it's not a support line when you're trading above it and you come down to it and bounce up off of it. In this case, and they're not all that uncommon, we came up to the line, stop at the line, and go back down. Now, this is one of the strongest closes, and you could even make a case for this being really on the line or maybe a hair above it, but a hair doesn't count. You usually want something significant, obvious, visually, of course, on a closing basis for breakouts. Breakouts should be high volume, should be a fairly volatile day, either a very weak day or a very strong day, usually making new highs or lows for a significant number of days. You know, something pretty profound. We ain't got it. 5-minute chart, nothing new, but it's getting closer. The spider, same as the E-mini as you would expect, although occasionally there are differences between the two. Next, SPY 5 minutes, climbing. And now we've got the QQQ, climbing. I believe this could be a new high close, but it's awfully damn close. So as I've probably said the last couple of days, this is a very critical price range, a very critical situation, and I am not going to be the slightest bit surprised if all of a sudden hell breaks loose. And that could be up, although I doubt it. I expect it to be down. And the 5-minute chart of the QQQ. And we've got the NASDAQ futures, not quite as strong, not quite there as the QQQ, but very close, of course. And the 5-minute chart, just barely making new highs for a few days. But coming up, let's go back to the daily chart again. Yeah, you have to go back to the rally high on a month ago, August 13th or so, to see that we're not quite there. And I'm erasing that short-term trend line, which I thought was a neckline for a while, and it did not turn out to be. So I should have erased it a few days ago. So double top, yeah, maybe. Not starting yet. 5-minute chart, minor new high. We've got the YM, the Dow, right up against a resistance area. Very, very, very close. Not overbought. And I think a very fragile situation. Very fragile. Next, YM, 5-minute. Just up against these previous highs. Watch out. Russell, in a major, wide, broad, vertically resistance area, and came down somewhat today, but not overbought, although fairly close recently. No downside breakout, no trend line breaks, no nothing that tells me it's about to crash some more. I think it will, but I need more weakness. And the 5-minute chart. How about bonds? Overbought second day in a row. Couldn't make a new high. Dropped off a little bit, no big deal, down 14. Is it turning around and heading south a bit to back to support, which I would expect to be 115.20-ish? I think so. Could it drop back below 15.20? Yeah, possibly. I could see it coming down to 13.02. Not necessarily that low, but a healthy downside correction. Something like a point, 2 points. 10-year notes have a bearish engulfing ER sell signal. Now, just because it's not very big, like this whopper back here on April 7th, which led to a pretty big correction. And I might add the top of the market way back here on September 17th, which started a bear market. So this could be very profound. I'm not expecting that at the moment, but I am totally expecting it to come down to 112.23, the beginning of support, probably 112.14, and I cannot rule out down to 111.22 and even a little bit lower into that support area. Okay, crude popped back up again, right out of a support area, which on Friday came down into, tested, did not get oversold, but support does cause a bounce, as you know, often, which it did. A little higher Friday, I meant yesterday, Monday, and a little bit more of a bounce today. Will it bounce a lot more? Yeah, it could. It bounced off of this support area, the same one, back in the middle of August. I would not be surprised to see it test 6,600 and maybe even a bit higher on crude. Next, we've got overbought yesterday, but not today, in natural gas. And that has a head and shoulder top formation, which has been acting perfectly so far, with a substantial downside objective of 1.333, give or take a little. Nothing wrong yet. I still am expecting enough bearish action to warrant saying that this rally is finished. And I'm not quite sure of that, but I do like the overbought, and today no new high and a minor new low, but the close is up a little. So I'm not sure. I'm looking for it to roll over and start to head south soon. Next, we've got the heating oil. A little up, not much. It's between a rock and a hard spot. So significant resistance around 2.4-ish and good support down around 2.22. I don't know. I'm waiting. Next, overbought again in gold. Then we'll look at silver, platinum, copper, then the grain complex. So, lower close after a higher high, overbought conditions for several days now. I've said many times, just because you get overbought, you don't necessarily top out immediately. But it is a warning that it is more likely than not going to happen relatively soon and not too much higher in price. Now, the price went up quite a bit more here But we haven't gotten any reversals. We had one little simple down day. It barreled through above and closed and steadily came up some more above resistance. This could be the start. I can't tell yet. If we're going to come down, I think we're going to come down to 35, 37, and maybe a bit lower than that. Next, we've got a doji inside day after being overbought for a few days without any upside progress, a loss of upside momentum for silver. So it closed below 4180, 4106-ish. Should be a downside breakout, and then I will be fairly confident, but not over. Don't ever get overconfident, then the market's going to turn around and bite you for sure. So always trade conservatively and a little on the scary side and protectively, etc. You are right sometimes, hopefully a lot, but the market is always right. Next, we got a bearish engulfing yesterday and a slightly lower close again today. I like that. Fine. Came down to support the bottom of it instead of the top of it. I'm thinking it's going to come down to 1302 at least in the next couple of weeks. Might even be faster than that. Remember, bear moves fall a lot faster than bull markets go up. Probably 2 to 3 times faster going down than up. Next, high grade. Sideways, boring, huge crash. I don't know. This market just, in the months to come, if we don't get a significant trend up or down, then probably copper is in a price fixing situation. Eggs disappeared because the government regulated the price of that. Milo disappeared because of that. Plywood, a variety of other commodities that have gone by the wayside. Pork bellies, because of government regulations. Fixed pricing, restrictions, not a free market. Copper, I don't know. It just might end up being that way. Can't really tell. Sideways, that's about the best I can say. Silver, soybeans, a little higher high, slightly lower close, bounced approximately off support, not too bad, dropped below it a little bit. So we could be turning around and starting to head north. Unfortunately, soybean oil says south. Soybean oil, for the first time now, has closed very substantially below the support line, which is a neckline on a large, complex head and shoulder bottom that I have been talking about for months and months. And until today, all the rules it was conforming to, including a bullish engulfing smack dab at the neckline back on August 21, that led to a very nice rally for a couple days. But this kills the pattern. I'm going to keep the pattern on the screen another day or 2 or 3, probably through the balance of the week, in hopes that it corrects it real quick. Now, sometimes this is a trick, but usually it's not. Usually it's now going to drop off a lot more. And that's what I have to go with at the moment. But we'll see. Next, strong close on soybean meal, coming back up nicely, expecting another test of resistance above 298 and then maybe higher. We've got a slightly lower close today in corn, but it's been going sideways for over a week, and I'm still friendly. I think this thing can come up to 440 to close the gap on the chart. The gap occurred way back on July 7th. Gap down. Tried to close the gap a little later, but couldn't quite do it. That doesn't mean it won't do it now. So let's see. I'm a little bullish up to 440. Wheat market, slightly lower close, middle of yesterday's range. No particular evidence that it's turning down, but I don't like it, closing that lower. Not that big a deal. My bullish engulfing on August 20th did get broken last week, getting below, not closing necessarily, but just trading below the low of the bullish engulfing kills the pattern. Now, this could end up being a double bottom, and I'd love to see another bullish engulfing like yesterday, No follow through yet today. That's not killing the bullish engulfing from yesterday, though. So let's see if we can start to make closing prices above today and yesterday's highs. Then yesterday's bullish engulfing will come back to life again. Right now, this little dip down today is not good, but it doesn't kill the pattern yesterday. And we've got a higher high, but a poor close, slightly higher on Shell, a stock. It's also becoming stuck between support and resistance. So I'm waiting for a breakout, either new highs, which will be quite bullish, or new lows for about a month. And if it does that, it's probably going to drop off to 67 and a little lower. And we're at 71. Not that huge a break. Maybe even down to 63 in order to close some gaps. We've got a little lower today after being overbought in Apple, and it closed part of a gap that I've been watching for a few days now and talking about. So I am expecting a move down to 230.88-ish, to be more exact, 85, 230.85. The high on September 2nd. Then if that does not hold and turn back up, then it's going to break that low on September 2nd and start to drop off toward the bottom of this trading range and probably even a bit lower than that. We've got Tesla dipping a little today, closing a little tiny bit of a small gap a few days ago. So I'm still looking for the gap to be closed, but it's very close, 339 and a couple of ticks to be exact, 338.89. That's the bottom of the gap. A little bit down, I'll pull it down just a hair. So minor dip to close the gap. Otherwise, you've got yourself an upward slanting channel, it looks like. I wonder if that is a parallel channel or not. Let's try that out. Close that window. And then drag this line across the tops. Ooh. Not particularly bad. Interesting. So let me put it back where it was. Support line underneath. Come down a little bit. We'll see what happens. Bullish engulfing today in NVIDIA. There is a gap above the market to close. Now, bullish engulfing ER buy signal under a little more profound circumstances like that one way back on April 7th. I know I'm talking about this in hindsight 2020, but you know damn well if you go listen to my recording on April 7th, I talked about this being a potentially profound one because it had a downside exhaustion gap, very old oversold conditions at the low of the day, down to 11. And I probably was basically screaming bloody murder, this thing could take off. And months later, after being around the low 90s, it finally had another bearish engulfing at 180. It doubled in value. So April to August. These bullish engulfing ER buy and sell signals often enough are extremely profound. Back to the E-mini. You guys have a great day and profitable trading to you.